Hi everyone, this is Mrs. V Chan. Welcome to my Form 4 Accounting lesson number 16. Today is 29th April 2020. Alright, so we will do one DSE question in 2012 about depreciation. Okay, and here is the question in 2012. Alright, so there are two kinds of non-assets given to us. One is machinery, one is lorries. Okay, so we are going to do it step by step. All right, and part A, the first question, we need to calculate depreciation expenses for the machinery and then for the year end in 2011. Okay, so here is the statements. Okay, later on we are going to show the steps here about the calculation of depreciation expenses for the year end 31st December 2011 for the machinery. Okay, so now let's look at the question. All right, so remember, whenever we calculate depreciation, the date is very, very important. So we are given the date here, which is 31st December 2010. And this is the costs for machinery and accumulated depreciation. And also, it is important to know that which method to calculate depreciation. And here it is. It is the company's policy to depreciate machinery at a rate of 25% per annum on costs. So therefore, we have to use straight line method to calculate depreciation on machinery. All right, and also if we are given this 25% on cost, actually it is exactly same as how many years? Do you know that? You can do that in this way. If you put 1 divided by 0.25, so obviously this is same as the useful life is same as 4 years. Okay, so here is the diagram and the timeline to analyze, and this is very, very important. So we start with the dates given to us here, and then now this is the year that we have to calculate depreciation during this year. Okay, so we are given costs on this date, which is 3.6 million, and then minus accumulated depreciation. All right, so which is 3.4 million and 55,000. Okay, so I just get information here. All right, okay, so what is the difference between this and this? So the difference between cost and accumulated depreciation means net book value. Now I use calculator to get net book value. So 3.6 million minus accumulated depreciation. So I have this net book value as 145,000. All right, okay. Now, according to information, we have to use 25% depreciated, okay, using 25% on costs. So what about if I use this, and then depreciation will be equal to 3.6 million times 25%, is that right? So how much is it? So in the normal situation, therefore, depreciation in this year will be equal to 900,000. Okay, so what happened if we, depreciate this accumulated depreciation here by another 900,000? All right. So this is the accumulated depreciation. This is at the beginning. And then if we provide using the normal situation, each year going down by 900,000. So what happened to the total accumulated depreciation? So if we add them up, okay, so you can see accumulated depreciation, if we use that, okay, the normal calculation, it is equal to 4,355,000. Okay, what's wrong with that? So you can see the figure is bigger than costs, and the cost is 3.6 million. Okay, and this is not possible because we cannot have net book value, which is a negative figure. This is not possible. All right, so the only conclusion can be we can put the minimum value for net book value should be 0. So this is what we have here. Okay, so therefore, since net book value cannot be a negative figure, and the lowest amount is equal to 0, which means fully depreciated. So in the last year here, so the net book value should be equal to 0. Therefore, so how much will be the maximum depreciation provided in the year? So that will be the difference between the costs, all right, and the accumulated depreciation, so which is same as the net book value here. So minus, so you can see minus this figure. All right, so this is the maximum depreciation, all right, to be provided. So if we add this 145,000 to this figure, and this one is same as the cost, so that we can work out net book value, which is equal to 0. Okay, now I can go back to my step here. So how much will be depreciation for the year for the old machine? So it will be the cost minus the accumulated depreciation, because we cannot have a negative net book value. All right, so if you go back to the question, so part 1, all right, we have another point here related to machinery, which is on 1st of March, a piece of machinery was bought at the price of 2.4 million. And also on the same date, a component of this costing 60,000 installed it. So we spent another 60,000 on this machinery. Okay, now timeline is very, very important. So therefore, so this is during the year of 2011, and the date is on 1st of March. So we have the new machinery. And then this is the costs for buying the machinery, 2.4 million. And then the firm spent another 60,000. Okay, so what do you think about this 60,000 installed it? Okay, what happened? So this increase is productivity. Okay, so since this 60,000 bring extra benefits to the machinery, so that we have to treat this 60,000 as capital expenditure. Therefore, not only 2.4 million, I have to add another, so 60,000. So this will be the total costs for the machinery. So the amount should be okay, I use calculator, plus 60,000. All right, so 246,000 like this, because this 60,000 give extra value, this 60,000 give extra value, okay, to the machinery, should be treated as capital expenditure. Okay, all right, so here we have the steps for depreciation expenses for machinery. So not only the old machinery, but we also have the new machinery. So this is the costs, and then this 60,000 since adds extra value to the machinery, so we capitalize 60,000, and this one means capitalize means we treat this 60,000 as capital expenditure, and it will be part of the cost of the machinery. Okay, and also timeline is very, very important. So how long we have used the machinery for the new one? So you go back to the timeline here. So starting from 1st of March up to the end. So we have used it for 10 months. So this is very, very important. So if you ignore this timeline, then all your calculation will be wrong. All right, so therefore, this is all about part A. Okay, so how much is depreciation for machinery in this year? So if you use your calculator, and the total amount will be 657,500, like that. Okay, so next part 2, we need to prepare accumulated depreciation. This time it is for the lorries, and then for the year end 31st December 2011. Now we need to draw up accumulated depreciation accounts. So therefore, this is accumulated depreciation account, and remember, this account is a real account, and then we have the opening balance to begin with, so which is 1.2 million. I just get this from here. This is the opening balance. All right, and then when should we provide depreciation? We always need to provide depreciation at the year end. All right, so the double entry is debit depreciation and credit accumulated depreciation. All right, and later on, depreciation, okay, will be close to profit and loss account. And later on, we need to calculate this figure, and then we are going to do that step by step, and then we draw a timeline as well. All right, and the method to use to calculate depreciation on lorries here is 20% using reducing balance method. So therefore, we need the net book value times 20%. And not only that, we have point number 2, saying that during the year a lorry was bought at the price of this much, and we also have new lorry bought during the year. Okay, so this is the timeline to analyze the situation. Okay, all right, so this is at the beginning. We are given the costs, we are given the accumulated depreciation for the old lorry, so that this is the net book value. So we can say that the workings here. So I put my workings here. So depreciation for the old lorry will be the net book value, which is this, the cost minus accumulated depreciation, and then simply times the rates, which is 20%. Okay, plus we also have the new one. So this is the information for the new one. The date is also at the beginning, and this is the price, purchase price. However, include an insurance premium. The point is, what should be the treatment for this insurance premium? So we pay this regularly, all right? And this insurance premium will not add extra value to the lorry. So therefore, this insurance premium should be a kind of revenue expenditure. All right, so therefore the costs of the new lorry, all right, should minus this 36,000, because insurance premium should be a kind of revenue expenditure. If it is a revenue expenditure, it should be a kind of expense in the profit and loss account instead of you capitalize. So what's wrong with that? Because of the word included. So included is wrong. We should not include any revenue expenditure as part of the costs of lorry. So that's the adjustments for the costs of lorry should be 1.9 million minus 36,000, which should not be part of the costs of lorry. Okay, so therefore the calculation for the new lorry simply will be, this is the purchase price excluding the comma should be here, revenue expenditure, and then times the rates for depreciation. All right, so therefore finally depreciation for the year for the old lorry and the new lorry. So this is a new lorry, should be 502,800. So therefore, so we credit accumulated depreciation by depreciation for the year, and then all together, now we can close the accumulated depreciation account in this way. Okay, and we close it the last date, and this is balance carry down. This closing balance in 2011 will be opening in 2012. So I just simply put that. So this is how we prepare the accumulated depreciation. So remember, you have to go through all the adjustments step by step, otherwise your calculation will be wrong. And also it is very important to distinguish clearly, so the capital expenditure and then revenue expenditure. So for this 60,000, it should be capital expenditure, and then for this 46,000, it should be revenue expenditure. Okay, so consistency means we have to use the same depreciation method for the same type of non-current assets. Therefore, it is not violating the consistency concept, because one is machinery, one is lorries, and then they have different consumption pattern. So therefore, the answer is not violating the consistency concept. All right, so that's all about the DSE question in 2012. Thank you for watching my video. I'll see you next time. Bye bye.